I get a lot of questions about 1031 exchanges, and I do think the advantages can be tremendous if a 1031 is used properly. So I want to speak to a bit of the detail in what drives the tax code and ultimately how you, your clients, may be able to best utilize a 1031 exchange. So it's driven off of tax code 1031. Pretty obvious where it gets its name. In the residential world, it's for investment properties only. So you cannot sell a primary residence, 1031 the proceeds into a new property. You can only do so with an investment property to an investment property. And what do I mean by that? What it was 1031 actually mean? What that means is you're essentially deferring the tax liability that would be due on any proceeds you take from the sale of an investment property. So let's say you buy the property for 200,000, you sell it for say 300,000, so proceeds of 100,000. And let's say, and just kind of spitballing here, not a tax professional, consult a tax professional, but let's say capital gains on that is about 15%. So you'd be due for about a $15,000 tax payment. What you can do is defer that, or whatever the tax liability is, you can defer that as long as you're utilizing a 1031, which means you're selling a property and you're almost immediately buying that next property, which is equal or greater to in value and of like kind, meaning you're equaling or increasing the price point on the next property. You're going either residential to residential, commercial to commercial. You are the same on title from the property you're selling, the property you're buying. And there are time constraints here. So within 45 days of selling the first property, you have to identify the next property, up to 3 of them, and then you have 180 days in total to get closed on that next property. So the analogy I like to give is it's kind of like Monopoly, where you're leveling up, and you're doing so in a potentially tax advantaged nature, meaning rather than paying the IRS each time you sell, you're deferring that tax liability down the road, which ultimately helps you grow your real estate portfolio at a faster pace because you have more proceeds rolling over, rolling over, rolling over. And if you do so in a way where you're maybe starting minimally, let's say you're a first time investor, you start with one minimal property and you kind of grow that. The snowball grows in time. That's the magic of it. And I think that's where the real benefit is. Michael Shotnik with Sierra Pacific Mortgage. I would love to chat with you about it. Feel free to give me a call. Thank you.